This video is about portfolio management. Now, you might have been thinking, oh, I'm just going to buy stuff on a schedule and leave it alone, and then what? Having some sort of plan for how your portfolio is going to look through the future is important. It's not just a matter of acquiring and selling, but you want to look at your portfolio like a living thing that's going to have different considerations. For example, in the summer, you wear less clothes. In the winter, you wear more clothes. Your portfolio is going to be a response to markets that have winters and summers. So to have a general idea of how your blend of assets might change depending on different conditions is important, because then it allows you to have a portfolio that isn't just exposure to the asset, but is a sensible blend of exposure in relation to how those assets are performing in the market. Generally speaking, cryptocurrency so far has had 4-year cycles of bear and bull markets. That's because it's a very young asset, and I think that in the future it won't have such a tight correlation to the performance of the US dollar or the stock markets or whatnot. This video is going to give you a couple things to consider if you want to try to make the most sensible purchases for the time, and you're going to put a little bit of effort into observing different aspects of the market. One other aspect of portfolio maintenance that's important to cover is management of your assets on chain. You'll be using things like self-custody wallets, whether they are hardware or software or what have you. If you do that, you're going to want to incorporate some practice into what you're doing so that you have a routine, and that's part of your portfolio maintenance. Is where are your assets located? How liquid are they for you to get to them? And when do you think that you may want access to them again? You also may have a blend of primary and secondary assets. Primary assets would be the ones that you consider your blue chips, if you will, that you're going to hold for a long time because you believe in their use case and you know that however the markets go, their value is going to keep going up. Other ones you may take on speculatively and add to your mix. And as you venture out onto that risk spectrum, you may want to have a certain balance inside your portfolio of how much of your assets are higher risk and how much of your assets are lower risk. Ensuring that blend is a matter of observation. So setting yourself up with the proper tracking or record keeping is going to be somewhat crucial there. One key thing about portfolio management is knowing where you are in the market. If you want that level of control with things, you're going to need some tools that allow you to see what price is telling you and what other indicators in the market are saying. Opening up the apps button on your standard login, you're going to have to scroll down a little bit and find Sheets. And if you want, you can grab that and drag it up here if you think you're going to be using it more often. We're going to open a blank spreadsheet. Let's start off with tracking our assets. So the first thing we want to do is list our assets. We are going to list the 5 that I have discussed before. First, we are recording the amount, price, which we bought it. It's up to you whether or not you note what currency you're dealing with. At some point, knowing that you were quoting Canadian or US prices may matter to you. Then we're going to want to know the cost, and that is how much we bought times the price that we bought it. And then here, we want to know the percent of the total. And I will explain that in a minute. These here are going to be entered when you have those figures for the first time. But until you do, we're going to use some sample figures. Your figures will be different. Let's say that for Bitcoin, I own 0.05 and I bought it at a price of 60,000. I'm noticing that it's faster to use arrow buttons to move around than it is to hit enter a bunch of times to scroll down. So the cost is, you start any sort of formula with an equal sign. You can select the cell, hit asterisk for multiply, select the next cell, hit enter, and that has given you your cost. Now, you don't have to type that for each one. You can take that and you can right click, copy it. I prefer to use shortcuts, so when you see me copying and pasting, it's going to be Control C and Control V. Copy, paste. Once that's done, we will want to have a total, which is the sum. So equals sum, open parentheses, start there, hold shift, press to there. You could also click and drag. I've selected that area. You can see it's in my little mini formula show up, which is showing me a readout from up here. I'm just going to close the parentheses there and hit enter. That becomes my total. The percentage of total, what can I do to hide the menus there? Gives me a little more space. The percentage of total is how much of this is this cell here. And you can see that that is 38% of this. There's a problem. If we go to Control Copy and we want to see that here, it shows us an error. Why? Because when you post formulas, it automatically adjusts. So you see this was B3 times C3. When we copied that formula, it became B6 times C6 because it knew we moved down 3 levels. You can't have that happen when this is not moving down with it. So the backspace out of there. This time, we're just going to take this part of the formula and we're going to put dollar signs in front of the D to say we do not want this row to change. And we're going to put a dollar sign in front of the 17, which means we do not want this row to change. Did I say row before? I meant column. We don't want this row to change. Now, I go to Control C, copy it, and when I paste it, it's giving me an accurate readout for each one of these based on the fact that the D17 is not going to change. That shows us our imaginary holdings right now. It's telling us that the amount that we have at our average purchase price costed us this much for all 5 of these assets. This is telling me that $7,875 has been deployed. You know what? I don't like these extra rows here. Right click and delete row. The reason why I didn't like those was because I knew that we had another piece to put in here and I still want it to be mostly visible on one page. What we are tracking this for as well is to tell us how much equity that we've put in, how much we've purchased, and how much cash that leaves us. So for example, let's say you set aside $10,000. You said, I'm going to invest $10,000 in crypto somehow. Then you made all these purchases in one day, or you made 1/5 of these purchases 5 times roughly, using a dollar cost average, just a periodic purchase, whatever it is. Your total equity in minus what you've purchased so far. So we're just going to hit equals sign, point at that cell and say this cell equals that cell. Our cash is this cell here minus this cell. And if this was what you owned and how much money you'd put in, you'd know that you had this much money left to deploy. So let's say you purchase some new crypto and you want to update your totals. What is an easy way to do that? What I do here is I have entry fields. So this one here is Bitcoin, list price, paid. Now, what I'm doing here in these first two cells is I'm referencing this cell for this one, and I'm referencing this cell for this one. And I'm saying equals this cell times that cell is 3,000 paid. It's the same as the figure here. We're going to take this, and if you use this little plus button, anytime you pick something with a formula or a number or whatever, if you want to extend that across, you can do that using that plus button by dragging down. Of course, I did not want to do that, so I'm hitting Control Z to undo, coming back to here. But what I do want to do is drag this down one bar, because this is the entry field where I enter the new amount of Bitcoin I bought, and I enter the new price that I paid for it. And then this is going to do something fun for us, where it gives us a new total amount that we own and our average price for it. And then that way we can always understand what our profitability is. Okay, so we've added some colors here. Now, what this cell here is going to do is do a sum of these two cells. So this one here is going to add up these two cells and divide it by the total owned, and that will come up with a new average price. These two cells here, and I'm going to divide it by this one here. So you can see right now it's only echoing what's up there. But let's say we buy 0.01 Bitcoin, only now the cost has gone up. So we add the new price, and it shows a higher average price. Knowing this information can be useful for determining how you're going to take profit. It can also be useful for telling you what percentage of how much you've invested. So if you're trying to hold a certain percentage allocation, you can see that this example kind of holds to roughly 40%, 20%, 20%, 10 and 10. Somewhere in that is what I would consider to be a relatively prudent division. However you do it is up to you. There'll be people who have no use for Bitcoin. There'll be people who will not touch anything except Bitcoin. You have to answer those questions for yourself. So this is obviously only of use to you if you are trying to keep a balanced portfolio over time. Some people will only care about balancing their purchases. And while that may end up with a portfolio that doesn't have the same balance, that may not matter to you. So do with it what you will. Now, how we take this and update over here is we hit Control C to copy, and then we come and right click right in this cell here, and we go paste special values only. That takes these numbers and just pastes them there without taking any of the formula or anything else. Being able to paste values in a spreadsheet is crucial. Sometimes you do not want the formula where you got those values. You see what happened here though. These got pasted. We know that this is the new amount that we own. This number, right after we did that, went up. Why? Because the purchase that we just made is now impacting the new amount and balance, and it doesn't know that we actually didn't make a new purchase since this purchase was already added to the previous purchase. So you come along here, you highlight those two, and just hit backspace. And that will clear them out. You will have the current readout, and you'll have what will become your new amount. So now that we have done that, we can take this template, as it were, and copy it over here and over here. Why have we done that? Well, we've done that so that we can actually make the same entry for all the different assets that we're tracking and not have to continually replug in the source or any of the other stuff. So once you do this, like you can see, I had to go through and name them. The next thing you're going to do is you're going to take the first two cells, like before, and you're going to say this cell equals this cell. Pick this cell, it equals, and that cell. Boom, hit enter. Let's see what's over there. This formula here is only responding to the two adjacent, so it is going to stay current. The rest of this all stays current. So we only need to prime these three here. There. We have all of our sources done. This is ready to take any new purchases we make and have them instantly provide us with what the new adjusted amount and average price is. Having a purchase ledger can be handy, keeping track of things so that you kind of get into a workflow and a stride with this. Your purchase ledger could be down here. You could record when you're buying it, what token, for how much, and what the price is. And then that stuff can just be like these two columns here, amount and price. If you had bought Bitcoin, for example, copy these up to here, come up with your new thing, copy it over there, clear the thing, and then you're on to ETH. And that is the balancer spreadsheet. This is what you can use as a tool to make sure your portfolio sticks to some sort of general balance. It's also a great snapshot to just take a look at if you are keeping track here about what your average price is. If you have strategic elements where you want to make sure that you have a certain amount of cash put aside at all times to, if say prices come down 25% suddenly in a few days, and that can happen in crypto, having some money to buy that, and then having the presence of mind when that returns back to your previous level to take some profits and maybe let some of it ride, any of that stuff. Knowing what your proportion is compared to your total equity it's good, because it will also help you think about that as you start to use up some of your dry powder, right? So say you start with 2,000 and you used up half of it because things just came down so far. And then things came down that far again, and instead of having 2,000, now you have 1,000. Do you blow the second 1,000, or do you just spend 500 now and keep 500? And then things come down again. Now you spend 250 and keep 250. For each one of those halves that you go down, that small amount is purchasing the same amount that your larger purchases did. That's an important part of portfolio maintenance, is making sure that you're always aware of how much cash you have left to spend and what your strategy is to deploy that. What your, how much of a discount, what kind of percentage drop are you looking at for an asset? A drop of 30% for AVAX in a day might only equal a drop of 5% for Bitcoin, because the smaller caps move a lot faster than a bigger cap like Bitcoin. So knowing what your conditions are and saying, okay, well, I'll buy Bitcoin if it comes down 10%. I'll buy AVAX if it comes down 30%. You know, what proportionality, having some sense of that is just, it's something to wrap your mind around. Start by hitting the plus button at the top right there. Add a new chart to your list. BTC.D will give you the Bitcoin dominance list. You can select it from the drop-down menu that appears to add it to your watch list, and it's ready to open and take a look at it. Bitcoin dominance, I'll make sure it's set to weekly because this is high time frame analysis. So Bitcoin dominance shows us how much of the market is just Bitcoin. When Bitcoin is dominant, generally speaking, investors are more scared. When the alts are dominant or Bitcoin is less pervasive, it tends to mean that it's a risk on environment and people are putting more of their money into other assets. Now, this can take place in one of two ways. Either new money entering the market is choosing to enter Bitcoin or altcoins, or it can be rotation of assets already in the market. So people selling their altcoins to put it into Bitcoin will send dominance up. People selling their Bitcoin to put it into altcoins will send dominance down. This is a good way to tell what investor sentiment is. These boxes, the first two, show reaction areas where at that point tends to correspond with investors making decisions or possibly seeing better returns on alts, things like that. And also, if you look at this screen here too, on the left, it shows like the birth of alts, where alts first become a thing to even threaten Bitcoin dominance. Very exciting at first, and as you can see, Bitcoin kind of rallies back for a bit. It goes down during the last bull market, and then it rallies back a bit, and it's where we are now. Now, over to the right, this is where I would see, if it was like the dot-com bubble burst of the internet era, you're eventually going to see the top invested coins rise to prominence and likely see some sort of impact as Bitcoin is the granddaddy of coins. If Bitcoin dominance ever goes up that high, it can't go higher than 100%. But I think if it ever goes above 60 or 80, it's going to mean that the large majority of alts have left the market. When this Bitcoin dominance starts to come down is going to be when it starts to make sense to ask yourself, is the current portfolio split I'm using worthwhile? Or should I start investing less in Bitcoin and more into other altcoins? Now let's look at the totals. Total 2, and total 3. Total shows us the current market cap of the entire crypto market. Total 2 removes the value of Bitcoin, and Total 3 removes the value of Bitcoin and Ethereum. These are ways of looking at the performance of the cryptocurrency market as a whole. Now, we can see that they're all very similar in shape, but in different respects, they will vary in volatility. Total 2 will be coming up for a chart later. And here you can see others, which is a similar one to total, except it's total minus the top 10 market cap cryptos that are out there. Now, Ethereum versus Bitcoin is another one that gives us some insight. We're going to add ETH/BTC. And so that's going to show us how much is Ethereum worth versus Bitcoin. And you can see that at its peak in 2022, it had some action. Now, this is in some ways the inverse of the previous chart, but it's also something that some people will trade. They'll trade back and forth, just flipping Ethereum for Bitcoin, Bitcoin for Ethereum, using this chart and these price movements to decide whether or not they want to rotate into one or the other. It's also a bit of a good barometer, and we're going to come back to it and use this as a comparison for the next chart we look at. Now get ready for this next part, because you're going to learn a brand new skill. You're going to learn how to create your own custom chart. It'll be important to follow along with the directions on the screen here, but what we're doing basically is we're taking the total 2 chart that shows all of the crypto minus Bitcoin, and then we're also going to remove USDT and USDC. So let's get started. Now you're going to type in open parentheses total 2 and select that from the thing at the bottom, minus USDT, and then select the market cap from the bottom. Same thing, minus USDC, the other stable coin of note, and select it from the bottom. And what that's doing is it's priming it. It's selecting a specific data source. Now you're going to divide all that by BTC, and it's important you choose the all-time history index for this, because it will show you as far back as possible the performance of alts versus Bitcoin. So this here is what we're looking at. And our first job here is to draw some support and resistance lines, because that is what price action is composed of, is behavior at certain key levels. What are we looking at here now? So we can see that the performance of alts has been on a steady decline since about 2021. It's been coming down. And now that we're about to enter a bull phase, I kind of predict that we're going to go up and people are going to be investing in these new altcoins, because Bitcoin, as you recall, is just a store of value and a transfer of value. The altcoins all have different computational use cases, and they're all competing with each other. A lot of people are speculating on what the next big thing is. So here you can see a couple possible projections for different ways that this chart can go. Knowing what to do as that direction takes place is the key insight here. So the first line that you saw drawn, where it goes from the current point and goes up to the next, to that resistance, that kind of resembles where people are getting out of Bitcoin and they're getting into altcoins. That will kick off a bull run where you'll see the entire market cap of crypto come up. And then at a certain point, you'll see people will think this is as far as it can go, and then they start selling at profit, hopefully, unless they're somebody who bought at the top, in which case sucks to be them. That's why you observe market movements like this. You get clear ideas of when's a good time to enter. It's worth noting at the bottom, though, where we are now, there's no guarantee that we are going to start a bull run from here. The price of Bitcoin and all the cryptos could go down further. Bitcoin, which is currently around 65K, we could go as low as 44K. And if we do, it will be much like those deeper squiggles at the bottom where we bounce around for a little bit and then we rocket up. What you're really looking for here is to observe the market as it reaches those highs, where you start to get the sense that maybe it's time to start either rotating some of your portfolio back into cash or stable coins, as it were, or it's time to rotate some of your capital over to Bitcoin, which is the first flight to safety for people when they start to get shaken out by investments. Another thing I want you to keep in mind about this chart in particular is that it's not correlated to the price movement of any of these tokens in the market. So while you see this chart coming down, there's been periods where the market has been going up. Like we've watched since the beginning of 2003, the price of Bitcoin has more than doubled. We broke new all-time highs, but this chart is showing a steady downward decline. That's because it's showing all of the altcoins versus Bitcoin, not versus the market. So while you see this coming down, it means that whether Bitcoin was going up or going down, your money was better in Bitcoin. At some point, that won't be the case, and it could be soon or it could be a little less than soon, but it won't be long. And when that happens, that's when people are going to want to start looking at their portfolio mix and deciding if they're going to buy a little less Bitcoin and more of the altcoins, or possibly rotate some of their Bitcoin into the altcoins. Now, don't worry if this isn't quite crystal clear to you yet. Again, this is a primer. It's a complicated primer, but if you follow things that I post and talk about in the future, this will be a chart that I come back to and reference as we go through the next couple years of the market cycles. Okay, so using our last chart, we're going to learn how to compare two symbols on the same chart. So up at the top left is a plus button. Hit the plus button, and in that entry field, type ETH/BTC. This will give us an index of how Ethereum performs against Bitcoin, and it'll put it on the same chart as the alts versus Bitcoin index that we made. Now, if you want, you can quickly change the color, make it stand out more. But what I want to draw your attention to here, first of all, is that Ethereum has a lot of the same characteristics versus Bitcoin. You can see most of the price action is mirrored. When it's going up for one, it's going up for the other. When it's going down for one, it's going down for the other. There are a few times where there's a major divergence, and usually that's because some sort of price event is happening for Ethereum. But you can also see that Ethereum tends to outperform the rest of the market versus Bitcoin. That's because Ethereum has a higher market cap than the rest of the alts and has a lot more developer attention. Even though sometimes it's moving in the same direction, you will see divergences. You'll see one move before the other, and that can be an indicator of its own sort. Now, I also want to show you that when you change the time frame on this, that comparison bar is going to be hopping around unless you select a different type of scale on the right. If you look from here, it's held very tight correlation. There hasn't been a lot of deviation since this spot here. Anytime you open any sort of time frame, you're going to notice that both of the lines, the candlesticks and the line that you're comparing, will have the same origin point. Everything after that will be the variation or the variance between the two of them in terms of performance or price action. This can come in handy for a lot of things. I use it as part of my strategy when I'm looking at which assets are deviating off of Bitcoin's path the most. One that every investor or trader has to look at is the SPX. It's a pretty good gauge of investor sentiment. When the SPX is bullish, things tend to be risk on. People are putting more money into assets. When that market is coming down, people are reacting out of fear, or they're selling off, or possibly a recession. That's usually a good time to buy. But paying attention to that will help reinforce other decisions that you make about investments. An important one that every investor has to pay attention to is the performance of the US dollar, how it relates to foreign exchange markets, how it relates to the cost of borrowing or investing in other equities. Generally speaking, when the dollar is coming down in value, then equities like stocks and crypto go up in value. When the dollar goes up in value, then those equity values tend to come down. It does have support and resistance zones as shown here, and you can use those as confluence for trade theories or investment approaches when you want to think about investing more or taking profits. You can see here too that I've put in 3 different possible courses, because your plan should encompass what happens in any eventuality and how you view that to your particular plan. We're going to look at the regression trend and the parallel channel. They're both very similar, but they have a slightly different way that they interface with the data. The parallel channel you draw yourself, but as you can see here, the regression trend just takes a time frame. In this picture, it's 2019 to current, but that's the weekly chart of Bitcoin, and it kind of gives you an idea that Bitcoin has had a steady upward rise and a certain high and a low to its range. And if you start to observe this, you might think about buying when it's low and selling some or taking some profit when it's high, depending on if you think it's going to keep going up or if it might bounce back down. But using the parallel channel here in this little section, you can see that since about March or April, we've had a pretty steady downward trend. The regression trend, as you can see, it's going to show you something different just depending on what little time frame you select. And one more thing to show you is that if you want, you can open up the customization and change the colors and styles and opacities and things like that. And so you can have regression trends that maybe mean different things on different time frames or what have you. It's a pretty versatile tool, and it can make certain elements of the information just kind of pop out or put your focus on it if you have a particular reason to believe that price action will continue in a certain direction for a while.
This video is taking forever.